Okay, another day bouncing around from positive to negative. We ended up lower on the Dow, higher with the NASDAQ and S&P. Dow was down almost 32 points. The Dow, the Dow was down 0.07%. The S&P was up 7 points. It was up 0.11%. The NASDAQ was slightly higher by 0.22%, and the Russell was up 0.76%. The VIX was down 1.87% to close just under 16 at 1578. Now, tomorrow, before the market opens, we're going to get the inflation data, the PCE inflation data for September. With the government shutdown, they're playing catch up. Month over month is supposed to come in, the headline number, at 0.4%. Whoops, wrong line. Sorry about that. 0.3%. The core month over month is supposed to be at 0.2%. The year over year is supposed to hold steady at 2.9%. The core is expected to rise to 2.8%, higher than the previous 2.7. Again, warned that we're going to see the inflation data. As I told you, it had already bottomed and it's been rising. And we're going to see a very similar situation to 2007 where inflation rises, but yet the Fed's going to come in and start jumbo cuts. We're going to move into recession. The stock market is going to price that in. Bitcoin's already pricing that in. The market's about to play catch up. The Fed will panic, do jumbo cuts, but inflation will still continue to rise. Eventually, we'll see a deflationary bust. At least that's what has happened in the past. In 2007, a very similar situation to what we have right now. So we'll be watching. If the PCE inflation data comes in hot, we'll likely see a sell-off. If it comes in cooler, may get that 2022 scenario that I've been talking about. I talked about it last weekend. I still think the right shoulder has a very good chance of playing out on the S&P 500. The head and shoulder formations that we saw set up just like we saw with Bitcoin before it crashed 36% in less than 2 months. Bitcoin has now confirmed a bear market in the daily, the weekly, and the monthly time frame. Never confirmed a bear market and gone up and made new highs. Let's move down to the 200-week moving average first, or completed the bear market first, dropping 80 or 90% first before it goes up and makes new highs. Last time Bitcoin did what it did back in 2021 and 2022, the market peaked with it, and we saw the 2022 crash. Bitcoin is warning you that the stock market is topping. It's going to follow Bitcoin's lead. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. You could take a moment to do that. I would really, really appreciate it. Follow the link below to take you to a secured site and you can donate any amount you want or make it a recurring donation if you do that. I think if you could take a moment to do that, I would really appreciate it. I thank you for your consideration for that. The stochastic reached extremes, started to turn back up, and has turned back down. It's still down here at extremes, so again, you're likely going to see off. Is that going to be with the inflation data tomorrow or with the Fed? I don't know, but it's telling us, hey, we're likely going to see the stochastic begin to recycle back up and see some kind of bottom. We had a breakout of the wedge pattern, as I said, and we're throwing back now in what is likely backtest mode. If we include the shadow here, where you can go lower on it. If you exclude the shadow, you're pretty much right at that level. Right, let's see, if we exclude the shadow a little bit and take it from this low, you're pretty much right at that level. But again, regardless, I expect the stochastic's going to recycle back up. I think the MACD will recycle back up and get back into positive territory. Last time we went negative briefly, and then we turned back up. Over here you went negative briefly, over here you went negative briefly, but then turned back up and got these surges in volatility. And the last time we had this happen, P dropped nearly 6%, NASDAQ dropped nearly 9%. If the stochastic recycles back up either this week or next week with the Fed, then I'll be watching, can we get back above the 50 and the 200? And again, when we see this next surge in volatility, the 50 will likely cross above the 200 once we go much higher and move above this high right here. That's going to open the door for a much bigger sell-off in the market So 50 gets back above the 200, and once price on the VIX is back above both the 50 and the 200 period moving average. Right now we have potential right shoulders on the S&P 500 and the NASDAQ and even NVIDIA. This is what Bitcoin set up. It had a triple top. And in the third top, it set up the head and shoulders. It played out. It back tested, dropped below the 20 period, the blue line there, dropped below the 200. We got the death cross eventually happening. We've held as we've had the 20 period hold as resistance. There it is, above it now. But again, this is likely a counter trend. We're going to get that next push down. And again, I think you're going to get two more pushes down on Bitcoin, one to 74,000, the April low, and then one, a rally off of that level, and then one beyond it. I think that will allow the stock market to play catch up. The risk is that we set up a topping process similar to 2021, and that is right here where Bitcoin peaked in 2021, completing the 4-year cycle, which it just did. If you want to see my latest Bitcoin video, I explained the 4-year cycle in that video. I'll link it at the end of this video. In my Bitcoin video, you can see all the confirmation signs in the daily and the weekly and the monthly time frame. I'll link that at the end of my Bitcoin video. You'll be able to see that Bitcoin has confirmed a bear market in the daily, the weekly, and the monthly time frame. And when that has happened in the past, the stock market followed. We had Bitcoin peak in 2021, November of 2021, November 10th. A couple of weeks later, NASDAQ peaked and S&P, they both sold off. Later, they diverged and NASDAQ made a lower high and remained in the downtrend with Bitcoin, and the S&P went 1.5%, just over 1.5% higher than the previous peak in forming a divergence with the NASDAQ. So do we see something like that again, like what we had in 2022, or is S&P, NASDAQ Junior, and we see them all set up the head and shoulder patterns like what Bitcoin just did in its recent top? I'm talking about this because, and even if you don't like Bitcoin, that's okay, because Bitcoin is warning you that the stock market is topping and we're going to get a sell-off. Now, maybe it happens the way it did in 2022, which I've been talking about all week, because we've been going sideways. But the upside potential is limited because of the channel that we now have turned off of in October. Do I think that's likely going to happen? I don't think it will, but it could. I'm open-minded to it, and that's why I'm taking the time to inform you about that possibility. What the S&P did in 2022, and this is a daily chart here, it peaked along with NASDAQ. Again, about 2 weeks after Bitcoin did, it peaked and it sold off. NASDAQ did too. S&P went back up here and it came back, tested this high. NASDAQ got a lower high in December, early January there of 2022, January of 2022, late December of 2021, and it couldn't move to new high. S&P moved just about 1.5% higher than the previous peak, and it slammed into the trend line of resistance, our current channel. And again, we could see something similar to that. I don't know that it plays out that way, but it's certainly possible because NASDAQ and S&P sometimes diverge from one another. I'm not predicting this will happen. I'm not saying it's going to happen. I'm saying it could. The institutions allow the S&P to go higher or they start more selling. And this was followed by a lot of selling. And again, we had selling leading up into this. We had selling in November of 2021. We had selling in December, November, and December. And then we pushed up with the parabolic rise for 4 days straight, went sideways, and peaked a few days later. And that was it. And then you had more distribution. So again, we're going to see more distribution because the AI bubble is bursting. People don't realize it yet, but it is. But do we see a situation similar to this? We just sell off and get that right shoulder. And I'm just telling you, this is a possibility if we don't begin to form to complete the formation of the right shoulders. And this scenario could be possible. And this is the S&P top at the 2022 top. And you had a very similar top in February of 2025, earlier in the year. Again, you had a peak over here, you had a sell-off, you came back up and sold off some more. And then again, you moved higher, you formed the divergence, and then you had the 21% drop. Very, very similar to the way it played out in 2022, and you get these head fakes over here. We went slightly higher there, and then we went slightly higher there. Again, each a head fake. Neither one of those breakouts were confirmed. Confirmation and a follow through, very, very similar to the double top pattern. And you get the top in a double top pattern. Usually, is what they do is they trigger all the stops. They trigger all the stops, and then they get a good laugh, and then they tank the market. Trigger all the stops, short squeeze, and then they start the big players, the institutions, they start dumping it. They do that just for laughs. That's why so often with a double top pattern, you go slightly higher above the previous peak. That's to trigger all of the stops and create a short squeeze right before they do the big dump, which is coming. See that happen again? I don't know. Right now you've got a possible head and shoulders, but we have to turn down and start signals revert back to bearish if the right shoulders are going to complete. That's what we saw with Bitcoin. Here is that 2021 peak for NASDAQ. Remember, S&P peaked beginning of January 2022. NASDAQ peaked over here in November, right after Bitcoin. It peaked about 12 days later, almost 2 weeks later after Bitcoin. 12 days later, it peaked. You sold off in November. You sold off in December. You went back up and you made a lower high and you diverged with the S&P. Do we see something like that again? Or do the head and shoulder patterns begin to play out as we now move closer and closer to the Fed meeting next week? Again, we'll likely see a sell-off with the Fed in all likelihood. Now, I'm still watching NVIDIA. NVIDIA's got this potential head and shoulders. Maybe it's done, maybe it's not. You got the bearish arrangement of the moving averages, the 10 and the 20, have crossed below the 50, the green line. We've rallied back up above the 10 here. We got a topping tail. It barely got confirmed. It wasn't really a decisive confirmation there. You closed just slightly under that level with the topping tail in the form of a gravestone doji, and then you're back now at the 20 period. So again, we've got to take out our previous low from late November if you're going to see this play out. Is it done yet? I was watching also the gap way up here, as I've talked about. I told you that gap may be filled at a later date. We don't know. The head and shoulders is in play. Now you have a bearish arrangement of the moving averages. Does that end up taking us lower on NVIDIA? And if it does, then NASDAQ should move lower. Recently, NASDAQ has been kind of shrugging off what's been going on, this selling pressure that we've had, and really lackluster rebound on NVIDIA, moving more with Apple, at least for now. NVIDIA trying to rebound today up 2% to the 20 period, the blue line there. The massive broadening formation with an overthrow on the NASDAQ. We have the NASDAQ in backtest mode of this other trend line. We already broke the one from the rising wedge there and from the April low. And now from this low and this rally that backtested, we're now backtesting that trend line. And we have a possible head and shoulders pattern. Stochastic's becoming overbought again. CD's turned back up. Do we confirm a lower high after the divergence has given us about a 9%, just under a 9% sell-off? The NASDAQ 100 was slightly lower today. Remember, the S&P was higher. NASDAQ Composite was slightly higher. S&P or NASDAQ 100 was slightly lower, down by about 25 points, down about 0.1%. Now, the price action today on NASDAQ 100, it gave us a hanging man candlestick. And you've got this potential right shoulder over here. You got the left shoulder. It's an unbalanced pattern. I've had person after person tell me, oh, that's a big no-no. The right shoulder can't be above the left shoulder, and you can't take out the low from the previous low and all this other stuff. And again, I've looked at hundreds and hundreds of these patterns over the last couple of decades. Inverse head and shoulder patterns, head and shoulder topping patterns on the daily chart, on the weekly chart, on the intraday charts. And I've seen boatloads have the right shoulder low or the head formation take out the low and the right shoulder. Now, that doesn't mean this pattern's going to play out. What would invalidate it is not invalidating it by moving down to a new low. it would not have validated by moving above this high. What invalidates is if it starts going above this high, that invalidates that pattern. If we did that and move back to this gap right here, then NASDAQ may do what it did back in 2022 and get a lower high while the S&P gets a higher high, and they may diverge if S&P tries to take out the previous high and slam into major resistance again in the weekly time frame. Now that happens, but it's a possibility, and that's why I keep talking about it, because we're going sideways. Back at the top, I was predicting we would go down to the October 10th lows, and we did. We slightly took them out, and then over here in late November, I told you ahead of the Thanksgiving holiday, I told you we were going to get a rally back up to form these right shoulders during the Thanksgiving holiday, and I told you at that time it may end after the Thanksgiving week if they come back and start selling, or they may let it go another week. Assuming these right shoulders set up, they may let it go another week and we'd sell in with the Fed. Get a sell off with the Fed. We're going to get the inflation data tomorrow. We're going to get the Fed next week. Back in 2007, you kept selling off with the Fed meetings. So far, we saw the initial cut in September. The market still moved to new highs, but then we peaked with the October meeting on October 29th with the Fed. That was the top right there. Get a sell-off. You know what happened? The last Fed meeting in October, that produced a top for NASDAQ and S&P, but you know what it did for Bitcoin? It produced the lower high for Bitcoin. That's right. It gave the final exit point for Bitcoin. It gave right shoulder for Bitcoin. Do we see the same thing right here with this Fed meeting with NASDAQ and maybe S&P 500? And then if we get the right shoulder, we got to come back down, take out the moving averages and the cloud. Now, the 10 crossed below the 50. It's now turning back above it. The 20 is just right there at the 50. So we'll be watching to see what happens. The moving averages are crisscrossing because we're going sideways. We'll be watching. Do we start seeing the stochastics roll over this week with the inflation data, or going into the Fed? Do we start seeing a sell-off here? But you now have a hanging man candlestick. The candlestick, listen carefully, the candlestick means absolutely nothing unless it gets confirmation and a follow-through. Over here you had a hanging man candlestick, you got confirmation, and you got a follow-through, and we had a sell-off of 9%. Here we had a bearish engulfing candlestick, no confirmation, no follow-through, and I told you I didn't think it would. Again, the candlestick means nothing unless you get confirmation and a follow-through. What I can tell you is Bitcoin has confirmed a bear market with confirmations and follow-throughs in both the daily and the weekly time frame. The NASDAQ and the S&P are next. It has this divergence on it on the RSI. It may not be done yet. There's a divergence on the MACD, but it hasn't turned back up. It still may. It doesn't have to. Sometimes divergences form on the MACD where it doesn't turn back up, but it's still a divergence with a lower high. Now we've got this divergence. It may not be done yet. We'll be watching. You're getting the 50 back above the 200. This is just telling us the moving averages are crisscrossing. It's telling us we're going sideways. We can see that. Bullish divergence, I talked about this ahead of the rally, and that's why I predicted we get a rally with Thanksgiving. We got it. The question now is, does NASDAQ go up here and fill this gap up right here where I've marked this top right shoulder, or do we get it right here? I put this right shoulder just above our recent price action, and we start turning back down and see the right shoulder begin to complete. Or do we push higher into this level and then turn, or again come up here? And if you come up here to this level right here, you could see the S&P attempt to make a new high, do what it did in 2022 and get that 2022 top, forming a divergence with the NASDAQ. Both really get the double top patterns, but NASDAQ got a lower high and S&P got a higher high. We'll be watching to see what happens with this, given our inflation data coming out tomorrow, ahead of the opening bell. We've got that hanging man candlestick today. Does it end up getting confirmed, or do we continue to try to go higher? So I'll be watching to see what becomes of this hanging man candlestick in the daily time frame. We're bouncing around on the S&P 500 as well today, and that gave us the same pattern, a hanging man candlestick. Now, again, It was a hanging man candlestick that formed the last two peaks. We had it at the top right here. It got confirmation of fall through. We ended up dropping nearly 6%. We had it with the lower high. And remember, the Dow was making a new high? We couldn't get it with the NASDAQ and S&P. We are within striking distance of trying to challenge that high. You're forming the same pattern you had over here, the same pattern you had over here, the hanging man candlestick pattern. These were confirmed. You had an immediate reversal and a collapse here right after the hanging man for the lower high. Again, gapping lower here as well, immediately confirming that candlestick the very next day on both of those occasions. Do we get that confirmation tomorrow with the PCE data or not? So again, you have a black candlestick, and by the way, black candlesticks are often associated with tops. It was over here with this hanging man. It was associated with these lower highs. The black candlestick forms when you open higher, but then close lower, but still not closing below the previous day's bar. That's why we had the candlestick there, black candlestick, and over here, because we closed above the previous day's bars. They're often associated with reversal bars, as a hollow red candlestick, like right here, is often associated with bottoms. Not always, it's not perfect, but often. 10 back above the 50 and the 20 still holding above the 50. Got to drop back below those moving averages and get a bearish rearrangement of the moving averages if we're going to go lower. Up the 2022 scenario, we go up and we challenge the high over here from the head formation. This is the last Fed meeting from October. That's where we topped. And then you get that divergence in all likelihood with NASDAQ. And that is assuming that we fill the gap. We fill the gap at 68.92 and try to make a new high. We go into the Fed meeting. So that is the possibility. And remember, in 2022, we only went 1.5%, just over 1.5% above this high. And if you do that, if you go above this high, you're slamming right back into the trend line of resistance in the weekly time frame. The S&P turned off of the upper channel from the 2020 low, connected to the 2025 low, parallel boundary to the 2022 high. And if we go up and form a divergence between the NASDAQ and S&P, you will see what happened over here happen again. And that is where S&P goes slightly higher into that trend line. Again, 1.5% higher, just over 1.5% higher. And we hit the trend line, and then we had the big sell-off, and we ended up seeing a drop of 27.5%. You're going to see a much bigger drop than that with this bear market, at least 50%. I think you're going to see more, something like 60 or 65% on the S&P 500, and probably 70 to 80% on the NASDAQ. Maybe more than 80%. Again, we saw an 83% crash with the bursting of the tech bubble for NASDAQ 100. S&P does go higher. This is a weekly chart. You got that trend line directly overhead. We just slightly overthrew it previously, but you could move just above this level if we see something similar to what happened in 2022. Not saying that's going to happen. I'm just warning you, we're going sideways, and it could. It did happen in 2022. Also saw at the February high, the S&P went slightly higher than the previous December and January peak, forming that divergence. So do we see something like that again? I don't know. I'm not predicting that, but I'm saying it is a possibility. Personally, I think the head and shoulder patterns could play out. And as I've said, I believe the NASDAQ and S&P have already topped back in October. I still think that, but again, we are going sideways. And we're not getting the immediate sell-off. We got doji candlesticks on the NASDAQ. It goes higher. We got a little divergence now in the intraday time frames, 15-minute chart, 60-minute charts, and you got a little one right here. Here in the daily chart, we do now have close above this area here. So you have a little tiny divergence right here as well on the RSI in the daily time frame. We've seen a drop of nearly 6% on the S&P 500. We've gotten the rebound off the 100-period moving average. We'll be watching to see what becomes of the hanging man candlesticks that we got today. A lot of chop this week. And from late last week right here, Gapped lower to start the week on the 5-minute chart here, and we just had a lot of chop here. And I told you either we're trying to break out to get a continuation, or we're rising up here to form the divergence to get the reversal, one or the other. And we peaked today with a black candlestick, and we gapped higher. We reversed, went back to fill the gap, went to the 200 period here in the 5-minute time frame, went up, got a lower high, made a lower low after that, took out the 200, and then at the end of the session we rallied back up, and all of that back and forth gave us the hanging man candlesticks on the S&P and the NASDAQ 100. There it is in the 5-minute time frame. To go lower, you got to take out the 200 here and stay below it, and then we got to be able to confirm that hanging man candlestick in the daily time frame. Formed this large divergence right here. It may not be done yet on the S&P, or we're just going sideways with the divergence. If that's all it's going to do, then again, the S&P could still come up here and try to challenge the October 29th high right here. And it is within striking distance if we don't get the divergences playing out on the intraday charts, and if we don't get the confirmation of the hanging man candlestick in the daily time frame. Each one of these cases, you've had this rising wedge develop. Here at the top, you went sideways and then you dropped. Here with the lower high, you got the rising wedge. You broke down, you went sideways, you dropped. Over here, you had the rising wedge, you went sideways, and you popped higher. And so now we have this divergence. Is it done yet? Does it begin to play out? Does it just give us a sideways move, eventually trying to go challenge the high? We'll be watching this closely. Signals still remain bullish. Remember, the signals, the swing trade signals, are just going back and forth from bullish to bearish to bullish to bearish. Now back to bullish as we're going sideways, forming the head and shoulder pattern. We're just in a range-bound trading range. So we're trendless as far as the daily chart, as far as going sideways. Like the NASDAQ, we got the diversions complete here. Could play out, but is it done? Got that other right shoulder filling this gap up here at 68.92. Do we fill that in turn, or do we turn here without filling that gap and do it at a later date? The S&P try to do what it did in 2022. And again, well, I still think we likely have a top. Again, that is still a very possible scenario. So I keep talking about that, to where you get a short squeeze and you go up here and you trigger all the shorts, you trigger all the stops and get a short squeeze, and then you get the big dump. Could happen. Nevertheless, you've got these divergences. We'll see what happens. It was the bullish divergences that formed here that I told you I was expecting that rally. The bearish divergence up here that I told you I was expecting the sell-off. Back to the October 10th low.